lot of charts today. So I will show you basically a lot of stock market indices, so world stock market indices from developed countries. We'll start with the strongest charts, which are obviously the charts of the US stock market, but also Canada and Australia. Then after that, I will show you the weakest charts worldwide with significant technical breakdown in Asia. So we'll talk about the Hang Seng, about China, about South Korea. Then after that, I will make an update on European stock exchanges, which remain in complex trading ranges. And we will end with a trading call on the British pound against US dollar. So first of all, an update about the relative performance of World ex-USA index against the world. So relative performance of the world of developed countries against the USA. What we can see is further underperformance this week of World ex-USA. This is a chart I commented last week. We saw breakdown recently, and we continue to see weakness and selling pressure on the world ex-USA. So it's not no reversal at all at this stage. It looks like a bit of capitulation move of the world index against USA. So the main question is, when are we going to see a reversal of this ratio? I think it's not healthy what we are seeing right now with the US market making new highs almost every day. I mean, I don't talk about the S&P, but about the Russell 2000 that I will show you in a few minutes, in a few seconds. Then other markets are in a really bad shape. That's especially true for Asia and Europe. And I don't think it's an healthy move. And sooner or later, we'll have to see an adjustment. So the US stock market will have to come down, or we'll have to see a recovery of World ex-USA. So if we now switch to individual charts, this is the Russell 2000. So as I told you, this index remains very, very strong, made new highs again this week. So this is record highs. So no real trend reversal at this stage. This is also true for the S&P small cap 600, which continue to hit new highs. We can see that easily. This is an indication that the US stock market remains very strong, and with small caps leading the market. Another quite interesting index here, this is the Canada, so the TSX index. New highs for Canada this week. The index managed to break above its previous record high, which was made in January. So the index has now fully erased the sharp decline of January, February, which is obviously an indication of strength, even though, as you can see, the index is back on a significant resistance zone and may encounter a resistance here due to overbought condition. But anyway, this is a pretty strong market, as you can see here. Another very strong market, this is Australia. A significant technical breakout this week. This is easy to see. So we can see that there are a couple of markets that remain quite strong worldwide. On the opposite, so now the weakest that gave a quite negative technical signal this week, this is the Hang Seng. So you can see easily a breakdown below the lower part of a symmetrical triangle, a breakdown below the rising 200-day moving average. So this is obviously a quite negative technical signal. I'm not convinced we'll see additional weakness in the near term, but anyway, from a technical point of view, this is obviously a breakdown. If we look at KOSPI, so South Korea, another significant technical breakdown. The rising 200-day moving average was already broken, and now breakdown below an important technical support, breakdown below the lower part of a symmetrical triangle, so another quite negative technical event. The last chart I would like to show you in Asia is the Shanghai Composite. So once again, breakdown below a key support zone. This week, a strong downside acceleration. So once again here, the mood is quite negative on the Chinese equities. We'll end the global overview with focus on the Euro Stoxx 50. So in Europe, we continue to see very, very complex moves. The index is at the same level than a year ago, so it's hard to see a strong trend, and it's even harder to try to forecast the index. But anyway, what I can see is that in April, the index made a strong recovery, failed to confirm the reversal, decline. Another recovery attempt last week, failure to move back above the 200-day moving average, then new decline. So it shows that in the short term, this index remains under pressure, and the risk is obviously to retest the 3300 area before seeing another relief rally attempt. But at this stage, we continue to see a very weak index, I would say, in Europe. So very weak European stock markets. I will end this overview of this mixed overview, I would say, with a trading call on the British pound against US dollar. This is a topic I developed yesterday morning in my daily. I also mentioned this idea in my weekly global roadmap. So the idea is to play a trading buy on British pound against US dollar. So the British pound yesterday hit Fibonacci support at around 131. Is building a bullish divergence on daily RSI. And I would favor, and what happened yesterday is quite interesting because we had quite positive news from the BOE and a strong bullish reaction on this Fibonacci support. So what I would favor from here is the start of a technical bounce. So minimum target would be 135, 136.